financial market to facilitate climate transition. The meeting also noted members' consideration in improving the credibility of financial institution commitment. Members also called to make to support for small and medium-sized enterprises (SMEs). Finally, members look forward to continuing the dialogue and much more progress in the next G20 finance minister and central bank governors meeting that will be planned to be held in Bali on 15 to 16 July of 2022. Thus, the main progress, and we are to be proud holding the second finance minister and central governors meeting held in Washington DC with a close cooperation with the IMF, and we are making a good process, good progress under Indonesian priority agenda. Thank you.
Thank you very much, Governor. Very insightful brief. So before continuing to the discussion session, let's hear from our next speaker, Gita. Gita, continuing the topic, would you mind also sharing with us the global economic outlook, including its impact from the twin crisis from the current heightened geopolitical tension and also the pandemic crisis? Also, what are probably the policy implications for emerging market, including managing the capital flows amid the abundant global liquidity post the pandemic era? And lastly, grateful you could also share with us the role of global cooperation to address those challenges, including from the G20. Gita, you have 15 minutes. The stage is yours.
Thank you so much, Mr. Mukhtar, and good morning to everybody there. It's a real pleasure to join this conversation, and thank you, Governor Perry, for your leadership of the G20 during this critical period. In terms of current developments, we're facing a situation where the Russian invasion of Ukraine is a crisis that comes on top of a pandemic crisis, which is something the country is yet to recover from. So we have a crisis on top of a crisis. And global growth has now been revised down in our latest forecast to 3.6% for this year. Previously, we had it at 4.4%, so it's a 0.8 percentage point downgrade. And we've also downgraded growth for next year. Yeah. While we've reduced our growth projections for the world as a whole, we have raised our inflation projections quite significantly. For this year, inflation is projected at 5.7% in advanced economies and 8.7% in emerging market and developing economies. These are significantly higher relative to our previous projections. So let me first describe the outlook and the forces shaping the outlook, and then I will discuss the risks, and then go into the policy priorities. In terms of the outlook, there are several forces shaping the outlook. One of the biggest ones is Russia's invasion of Ukraine and the subsequent sanctions that have led to sharp disruptions. We have countries that neighbor Russia and Ukraine that have very close direct links with these countries being hit very hard. Some of them are also being exposed to a large number of refugees. Now, the key channels through which this war is spilling over to the rest of the world, I would say first
Cici udah minum?
is through
Udah minum air hangat?
the rise in energy and food prices
Mama lagi tanya sih,
is now adding to inflationary pressures.
Orang Cia belum
At a time
jawab.
when inflation, for instance, if you look at the prices of some key
Cia
metals
udah
and
minum?
grains, they're at the highest levels in more than a decade. And then some parts of the world, like the Caucasus in Central Asia, Turkey in Africa, rely quite heavily for their food on exports from Russia and Ukraine. And so the longer this conflict, further security. So I would say one of the biggest spillovers from this war are through the global commodity markets. And of course, you also feel the energy prices have gone up, both oil and natural gas. And because Europe relies, some countries in Europe, like Germany and Italy, rely quite heavily on natural gas exports to Russia. We have significant downgrades for instance, the euro area. Then there are, of course, other countries in Eastern Europe that are getting affected. There are financial market volatility that has increased. It go up quite a bit. It has come down since then. So I would say this particular channel is still relatively well behaved in the sense that we aren't seeing very large amounts of financial distress. And of course, there is a huge humanitarian aspect to this war. This is, in fact, the fastest growing refugee crisis since World War II. Counting refugees and those who have moved within the country, over 11 million people are displaced. So that's one big bucket which is coming from the war. The second, another big area that is slowing down growth in the world is the growth slowdown in China. In China, a surge in COVID-19 infections and mobility restrictions are weighing on growth in the midst of a broader slowdown that's coming from slower recovery in consumption and ongoing crisis in the real estate sector. And of course, not to forget that the pandemic is still not over, and you're seeing it in many other parts of the world, including China. In terms of on the policy front, even before the invasion of Ukraine, inflation had risen significantly in many countries, and many central banks have started to tighten monetary policy. Policy rates are expected to go up even further. This obviously poses a risk to emerging and developing economies. In the event of monetary tightening that is really rapid in advanced economies, this could cause borrowing costs to go up for emerging and developing economies and the risk of capital outflow. On the fiscal side, fiscal policy was used in protecting people and firms in the crisis, in the pandemic crisis, and so countries built up a large amount of debt. Debt to GDP ratios are at the highest levels on record in both advanced economies and emerging markets as a group. So the policy space that exists to tackle new and ongoing challenges has become much, much smaller. So we're in this environment where we are hit with crisis on top of a crisis, where how the risks in this environment can be quite significant on the downside. Financial stability risks rising. The war is really testing the resilience of the financial system. Like risk out markets as bank price by inflation. Food insecurity as food and energy prices continue to rise, which have inflation, could have social unrest in many countries. So these are big risks, and since the pandemic is not over, another risk is you could see a new variant that comes up that creates much more distress than what we have right now. And of course, there are the longer term challenges that we have to deal with. One is to do with the fact that the pandemic has led to what we call scarring in many emerging and developing economies, and that's much more than in advanced economies, which is basically that if you look at their projected GDP level, say in 2025, relative to where they would have been in the absence of the pandemic, pre-pandemic, that there is a big gap over there. So there is an important hit to GDP and to income in these countries. And there are many factors behind it, including the hit to learning because of schools being shut down and remote learning not really working very well. Labor markets are tight in advanced economies, while employment in emerging markets has not yet recovered to its pre-pandemic levels. and while at the same time informal work has risen. So we are seeing large emerging markets where informality rates are now higher than pre-pandemic levels. And like I said, there's unprecedented disruptions in schooling that could diminish human capital for decades to come. Moving on to the policies, on the policy front, the immediate priority is to end the war in Ukraine. That would be the way we would at least take one crisis off the table. So end the war in Ukraine, focus on ending the pandemic durably, fight inflation, and address debt. So domestic policy responses are required to have these very difficult trade-offs in many countries, because on the one hand, you're fighting inflation, you have to bring it down, but at the same time, you need to be able to preserve the recovery, build resilience, and improve medium-term prospects. On monetary policy, our view is the central bank should act decisively in places where inflation is well above target, and they should do that to return inflation to target, and thus, preserve medium-term growth prospects. At the same time, they should, of course, be data dependent and also communicate very effectively, because it's important, especially for major central banks, that they do not generate large spillovers and large tantrums in financial markets. On the fiscal policy front, as I said, most countries do not have much fiscal space, and so, but at the same time, given what we're seeing in terms of rising food prices and energy prices, we see a case for very, very targeted and temporary support for the most vulnerable in the population. So governments should certainly prioritize food security. They should address inequality through taxes and spending policy. Where feasible, they should continue to take out pandemic-era support, and they should minimize learning losses from school closure. Now, there are countries that have high levels of debt. It will help them in these times when real interest rates are expected to rise to have very credible medium-term frameworks, because that will help them also in terms of lowering their borrowing costs. Financial sector policies also will need to be undertaken. You have, especially as monetary support is withdrawn, you need to make sure that there are adequate disclosures and standards, accurate asset classifications, and loan loss provisions. And to reduce the rollover risks which can happen, for instance, when interest rates start going up in the advanced economies, it is important to reduce currency mismatch and allow countercyclical activation of macroprudential buffers. It's also important to regulate private crypto and include cyber risks in financial stability analysis. And of course, it's important to invest in a resilient, green future. While the rest countries should promote the greener economy and invest in renewables, electricity networks, energy efficiency. This will also help bolster energy security, raise GDP, and create new jobs. Carbon pricing, we believe, should be at the core of any global mitigation strategy, but of course, there's also the need for investment in renewable technologies, infrastructure, and also just transition, which is to make sure that some of the revenues that you raise, you provide as transfers to the most vulnerable population to protect them from costs that may go up in the transition. Countries should also, of course, harness the potential of digital money, including through carefully designed CBDCs. And we need multilateralism more than ever. The immediate areas of cooperation should be, firstly, to lessen the humanitarian effects of the war. This is through helping refugees, to dealing with food security problems. Secondly, it's important to ensure equitable access to the COVID toolkit, including $15 billion of funding this year. We saw that it's not just about vaccine, but it's vaccines, testing, diagnostic surveillance. Three, preserve the climate objectives, climate objectives. Having a carbon pricing floor, for instance, is an important part of that. Green investment, fair transition adaptation. And another big important area is on sovereign debt resolution. There will be countries, there are countries already for whom the debt is very large and it would need to be restructured. The common framework had provided the promise of being able to do the restructuring while ensuring fairness of treatment across all creditors. But that framework has yet to deliver. So much more work is needed. And lastly, on the international front, we need cooperation on taxation and financing for development. We're very fortunate that IMF members have taken very important steps forward. Last summer, we allocated $650 billion in SDRs. And just last week, we approved the Resilience and Sustainability Trust, which is an important step forward, as it's expected to provide long-term financing for climate and pandemic resilience. And the fund stands ready to help all of its members. In advance of the spring meetings, the fund revised our institutional view on capital flows to expand the flexibility to use capital for capital inflows in cases where vulnerabilities exist. We know that capital flows have several benefits, but at the same time, they can lead to some serious macroeconomic challenges and financial stability risks. The point of this update to our institutional view on capital flows was to provide more tools to deal with this kind of, to prevent this kind of volatility. So we certainly see an argument that in some circumstances, countries should have the option of preemptively curbing debt inflows to safeguard macroeconomic and financial stability. Now, while all of these issues have been actively discussed among the membership during the spring meetings, it remains clear that the G20 serves as an important forum for global cooperation. Has provided key support for SDR channeling and the RST. Indonesia has displayed tremendous leadership, including through the work of the G20 Joint Finance Health Task Force. And now we need to urgently resolve implementation challenges regarding the common framework. Overall, it is clear that we are at a watershed moment for multilateralism and international cooperation, which calls for the preservation of the rules-based framework that has governed and benefited the global economy for 75 years. Thank you.
The presentation cover all the issues from how the fund see the challenge going forward and also how they respond to the delicate issues. Now let's continue to the last session, which is the Q&A. In the interest of time, we already selected two participants that would like to ask questions to the speakers. I believe many participants will have many queries and in this regard. But having those two participants, hopefully they can represent all the diversity. So the first participant that would like convey the question is Miss Amalia Widyasanti. She is Deputy for Economic Affairs, Ministry of National Development Planning. And then the second one is Professor Hermanto Siregar from IBB University and also Rector of Perbanas Institute. Grateful if both of you could convey very brief question to the speakers. Please let us know to whom your question will be referred to. To be more efficient, I would like to gather all the questions first time before being answered by the two speakers. Now, let me give the floor to the first participant, Ms. Amalia.
Thank you, Pak Firman. Thank you very much, Excellency Bapak Periwarjo and Ms. Gita Gopinath for your insightful presentation. I have two questions. The first one is regarding the impact of the Russia and the Ukraine war to the commodity price. How long the high energy prices will stay? Will there be a new equilibrium in the energy market, and what will be the implication of medium-term green objective? And my second question is, given the fact raising risk of global economy that you mentioned before, Ms. Gita, countries now tend to have more inward-looking policies. How do you think that G20 will mitigate this issue? Thank you very much.
Thank you, Ms. Amalia, for thoughtful and also Very provoking question. Let's move to the second participant, Professor Hermanto Siregar. The floor is yours. Professor Hermanto, can you hear us?
Yes, thank you very much, Bapak Bincang. What is the implications of the current global economic situations on Indonesian macroeconomy, and how could G20 best deliver its goals, recover together and recover stronger to its members and to the rest of the world? And for regarding the impact of the you mentioned about cooperation on international taxation. Could you elaborate more on that? Thank you.
So thank you so much, Mr. Maria and Mr. Hermanto, Professor Hermanto. We already have that fourth question. Those, if I could read from the question, it should be two for Gita and two for Governor Ferry. The first question will be related to the impact of war, including the commodity price and the impact for the long term for the green economy, and also how is the impact to the strategy of policy framework regarding the inward looking and then the implication for the G20 going forward. And also from Professor Hermanto, the question will be related to the implication to Indonesia and also the role of G20 to address the issue. And then the second question will be related to the taxation. I give the floor the first time to Governor Perry to answer the question from Amalia and Professor Hermanto. Governor.
Thank you, Ibu Amalia and Pak Hermanto Siregar for the excellent question. This is actually the discussion under the G20 as well as under the IMFC. I think Ms. Gita will share about the IMFC. I will share how the G20 discuss this issue and what the policy was being formulated and also share among others and how this also impacted Indonesia. First, on the impact of the war between Russia and Ukraine, of course, there are three channels of the impact, as we already know. First, of course, to the trade channel. The trade channel, which is also the impact of the war, of course, making the problem of disruption of the global supply chain as well as the slowing of global economic growth. As we already know, IMF already revised down the global economic growth to 3.6% this year. The second impact is, of course, high commodity prices, especially the energy prices and food prices, which is also directly impact for all countries. Inflation, not only advanced countries, but emerging countries and developing countries. This is a much more serious problem, especially for emerging countries and developing countries. Most of us just want to recover, and there's a limited fiscal space, and also some of the developing countries have that problem. It is becoming a serious problem on how to recover in emerging countries, developing countries, as well as in developers. Of course, financial channel. The impact of this war with the implication of many central bank need to raise interest rate to address the inflation and also the global liquidity tightening. This three impact being discussed under how G20 address this issue. Of course, there is a solution on the short term and as well as on the longer term. On the short-term solution, of course, how to address the impact of the inflation in a number of countries. Yes, many central banks need to address to avoid this inflation pressure from increasing interest rate and or balance sheet tightening. The discussion under the G20 is reiterated back our commitment in February meeting in Jakarta. The members country committed to well-calibrated, well-communicated, well-planned normalization process. By doing that, then many countries, especially emerging countries, well prepared to mitigate this. From the emerging and developing countries, there is also a commitment to strengthen the sound macroeconomic, both fiscal and monetary policy. This is where the IMF can help emerging and developing countries to enhance integrated policy framework, capital flows management, working closely with BIS, macro financial policy framework. I think those the discussion under the IMF, and of course there is a role of the IMF. Kita can share with us to strengthen the global financial safety net under the IMF. Those the discussion under G20. Yes, members committed to recover together, recover stronger, to address the short-term problem, but also back to the longer problem. The longer problem already on the agenda, how to do the structural reform to address the scarring effect of the pandemic, how to address the health problem, how to address digital payment system, central bank digital currency, sustainable finance, green economy, as well as inclusion. This agenda still ongoing and on top of additional problem to address the impact of the war in Ukraine. Number 3, what is the impact of Indonesia? Indonesia, I think we are fortunate because the direct impact of this war are limited. The indirect impact from the trade channel, of course, with the declining of global economic growth, then of course our real export contribution to GDP will be lower. That's why recently the Bank of Indonesia revised down our forecast to 4.5 to 4.3% from previous forecast 4.7 to 5.5%. The impact on the commodity prices, of course, depending on how the fiscal policy will be. Remember, the impact is more on the energy price and food prices. And the government, of course, will not pass on all of those high commodity price to the consumer. Some of the fuel price, for example, of course, premium and diesel still subsidized. Electricity still subsidized. And the high commodity price also increase the revenue of the fiscal from this increasing commodity price. So this is the policy that I do understand. Minister Sri Mulyani still calibrating what is the correct response. Some of them, of course, will be passed on the inflation, but many of them will be also absorbed by fiscal. From monetary policy, we ready. We always ready to ensure our exchange rate stability, to ensure our inflation well anchored, to ensure growth going continue. Our exchange rate continue to be market-based, market mechanism, and thank goodness our current account deficit is very small, supporting the positively our exchange rate, while we can direct to address domestic inflation and growth forecast by normalization of our liquidity first, and later on, if there is fundamental pressure, inflation rises beyond our targeted, of course, we do not hesitate. Later on, we can calibrate the response to interest rate. This is the sequencing of our monetary policy. This is exchange rate stability, liquidity normalization, and then following up by interest rate. respond. And of course, we will communicate to publicly, to the market and the economies how best we respond. But last but not least, Indonesia are fortunate on our strong economic prospect. This year, our economic recovery continue. Price stability continue stable. Exchange rate stability continue. And also financial system stability. The reform
Mama
of
Bobo.
Indonesia
Mama
to
Bobo.
strong, more prospective, medium-term outlook of Indonesia. This is the spirit of recover together, recover stronger, which is Indonesia also pioneering on this issue and also sharing among the G20 members. Thank you very much. Those my question to my answer to the two questions. Thank you.
Thank you, Governor. That's a very comprehensive answer. It's not only related to how we see the impact to the national economy, but also how we see the interaction among the policy will be taken in the policymakers, and also how is the role of the G20 to address all those challenges. And next, Gita, hope you would like to also answer those questions from those two participants. Gita.
Yes, happy to. So on the question of commodity prices, we use what the futures prices tell us in terms of commodity prices. So according to the futures market prices, commodity prices should come down between this year and next year. On average, it should be lower. That's the projected path for commodity prices. To your question of what are energy markets going to look like and the implications for the green transition. So I would make just a couple of points, which is first, what we are seeing, of course, is that right now, as energy costs have gone up and countries are looking for substitutes and cheaper sources of energy, we do see some backsliding happening in relative to the energy transition, in terms of moving, some countries going back to coal to generate their power. So you definitely have some temporary backsliding, but what you are also hearing of, especially when that's coming out of Europe, is that this shock has actually accelerated the determination to move much more quickly towards relying on renewables and making the transition happen quickly. So I would say that while in the short term it maybe makes it worse in terms of the transition, but in terms of the medium term, long term, I think this is actually going to push the world on a more greener path, at least in some places. For sure, energy trade is going to look very different very soon. It already is. Europe is moving away from Russia. They've said they will do that in the next 12 months. So where we find power prices, and also as countries, rely more on renewables and solar and wind farms and so on at home, that will also change the demand for fossil fuels and also demand for exports from other countries. So I think that's something to keep in mind. Countries and their inward-looking policies, I would say that one of the big issues that came up in the spring meetings was indeed the fact that after the pandemic and now the war, countries are rethinking how to trade with the rest of the world. On one hand, we know that trade provides immense benefits around the world, raising prosperity, increasing productivity, keeping but on the other hand, use our analytical work no two shops are necessarily going to be
Nah.
the same. So you really want
Iya.
supply chain. The way to build it is sourcing your
Iya,
inputs
rumah.
from multiple
Aduh,
That's
aduh.
the big issue going forward. And the international tax question, I was referring to the agreement that was signed by 130 plus countries to taxing corporate profits, which is the first pillar, one pillar which is about taxing extraordinary profits based on where you sell your goods, where your customers are, as opposed to where your employees are. And the second, to have a global minimum tax of 15%. So countries have agreed to this, but now what you need is implementation. And that's what we are pushing countries to do. I'll stop with that.
Thank you, Gita. Very clear answer from you, which is touching not only for the short-term issue but also long-term issue. With that, I think I would like to say thanks once again to all speakers, Governor Perry and all you, Gita, for the time. I believe we have seen that the role of G20 is taking under Indonesia presidency, as well as the current global economic outlook and its policy implication. Really appreciate once again Governor Perry and FDMD Gita for participating in this event and sharing a thoughtful update on the G20 and the global economic outlook. Thank you also for all participants for joining today. But before ending the session, I would like to ask Governor Perry to convey a short closing remark for the session. Governor.
Well, let me thank you first to Gita. Thank you for your support of G20 and also MD Kristalina, which is this is make a difference of the G20 and the Indonesia presidency. The world is living from one crisis to another crisis, Asia crisis, global financial crisis, and then COVID crisis. Or, as Gita mentioned, crisis on top of crisis. But in September 26 of 1999, G20 was formulated as a consensus base of 20 members countries, becoming a premier of multilateralism to solve the global problem, to solve the global crisis, to be better living for global economic recovery, to serve the needs of global and people around the world. This is the spirit that Indonesia coming through as a presidency of G20 in this 2022. Yes, there is challenges. After the pandemic, we have to recover together, recover stronger. Now, on top of this, we have a crisis also of Ukraine. But the spirit of multilateralism under the G20, this is that we want to bring about to solve the problem as together, to strengthen the power of we of Indonesia to the global, to better living, to recover together, recover stronger. With that, very Warjo, Governor of Central Bank from Washington DC, together with Ms. Gita Kupinat. Thank you very much for our audience in Jakarta. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you very much,
Governor Perry, Ms. Gita, and Mr. Firman, we would like humbly ask for quick your time. We will have a virtual photo session, Pak. We will take 2 shots of photo. I will give the countdown. All right, everyone's ready? In 3, 2, 1. Once again, 3, 2, 1. All right, thank you very much, Governor, Ms. Gita, and Mr. Firman.
Thank you. Thank you, Governor. And I give it the stage back to Nadira in Jakarta. Thank you, Nadira.
Thank you, Pak.
Karena Bapak Raja.
All right, ladies and gentlemen, our honorable guest here in Fairmont, Jakarta and Washington, D.C. Though Indonesia's economic recovery accelerates in 2021 and it is predicted to improve again in 2022, Indonesia still faces challenges in returning to its pre-pandemic economic growth. Hence, this session will bring out a deep conversation about those predicted challenges along with our approach to overcome it. On such note, the second session will discuss the global economic recovery and its implication on Indonesia. It will be moderated by senior Indonesian journalist of Metro TV Jakarta. Ladies and gentlemen, without further ado, let's give us a warm welcome to Miss Kania Sutisna Winata. Thank you, Nadira, for that warm introduction. Hello, a very good morning to all of us, ladies and gentlemen, participant of this G20 Finance Tracks and Events high-level discussion. Welcome to the second session, where we are going to discuss ways on strengthening economic recovery amidst heightened uncertainty. That is our topic, as we are still grappling the onset of a pandemic that has been happening for the last 2 years. We want to take, of course, a closer look on how Indonesia is doing right now. My name is Kania Sutisna Winata, and it is a pleasure for me to be here to lead the discussion for the next 1.5 hours. So if you allow me, I would like to take a seat right now as I introduce further the topic of discussion that we are going to have in the next 1.5 hour. As was also mentioned earlier, that Indonesia's economic recovery accelerated in 2021, and it is predicted to improve some more this year in 2022. But however, despite the recovery that we are seeing, Indonesia is still facing a lot of challenges, as was also highlighted perhaps in the first session. Uncertainties caused by rising geopolitical tensions, inflationary pressure caused by commodity and energy hikes. If we want to achieve and also regain pre-pandemic growth level. So these are some of the questions, some of the issues that we are going to discuss with our distinguished speakers that I'd like to invite. So the issues are, what are the macroeconomic risks that are foreshadowing Indonesia's economic recovery, particularly this year? Which one should we pay attention to? And how can Indonesia counter those risks? What kind of a mitigation strategy can be adopted by Indonesia to provide cushions for a stable and also long-lasting recovery? And last but not least, maybe in the longer term, this is how Indonesia should address as well, is how to counter and address the scarring effect of the pandemic, mainly of lower productivity, among others. What kind of structural reforms are needed and suitable for rejuvenating productivity? So to discuss more on these issues, we have joining us two prominent speakers who are present with us, among us, this morning. First, I'd like to introduce our first speaker and invite her to please join me on stage. It is my honor to invite Senior Deputy Governor of Bank Indonesia, Ibu Destri Damayanti. Please welcome. Good morning. A quick hello. Pleasure to have you with us this morning.
Hello, good morning, Kania. Nice to see you again.
It's a pleasure to have you with us. I hope you're keeping yourself healthy. Just a very quick background, ladies and gentlemen, not that she needs any introduction, but perhaps just a quick reminder that Ibu Destri was appointed as Senior Deputy Governor of Bank Indonesia starting in July 2019, and prior to her assignment as Senior Deputy Governor of Bank Indonesia, she had held various strategic positions, including member of the Board of Commissioners of the Deposit Insurance Corporation, or LPS, for the 2015-2019 period. And she holds a bachelor degree in economics from the University of Indonesia and a Master of Science from Cornell University, New York, USA. And now moving on to our second speaker, who is also joining us here this morning, is the head of macroeconomic and financial sector policies at Prospera, Mr. Anton Gunawan. Please welcome. Hello, good morning. Thank you again for joining us, sir. Such a pleasure to have you with us. And just a quick background on Mr. Anton Gunawan, who's also very well known and probably doesn't need an introduction. But just a quick background on what he's doing right now. He's currently serving as head of macroeconomic and financial sector policies at Prospera since May 2019, and in his current stand, Mr. Anton holds a sarjana economy degree from the University of Indonesia. So again, welcome to our panel. So we were supposed to have a third panel, but on behalf of Mr. Ashad Rashid, I would like to apologize that he will not be panel. So our discussion for today, as was also highlighted during the first session that was just concluded, we'd like for each of our speakers to give a brief presentation of about 15 minutes, which then will be followed by a Q&A session, which we are going to select participants to ask questions to you, Ibu Desri and also Pak Anton. But starting with Senior Deputy Governor Ibu Desri Damayanti, thank you again for joining us this morning. As we are seeing right now, the central bank has been keeping a set of policy mix strategy that has been optimized to support a stable recovery of Indonesia's economic growth, as we are also seeing flattening of COVID-19 cases in the country, and this could perhaps solidify growth projections for this year and also for the coming year. But we are seeing rising geopolitical tensions that could perhaps pose a risk to the growth projection so far. So what is the central bank view on this? What are the macroeconomic risks in this year that could foreshadow economic growth, and what do you as a policy maker how would you as a policymaker communicate a policy framework that would provide a forward guidance to the market, to economic agents? The floor is yours.
Okay, thank you, Nadia. Very good morning to all distinguished ladies and gentlemen. And thank you also for coming to the very important and interesting event. It's a part of the G20 event, Indonesian presidency. And Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera for all of us. Salam, Om Swastiastu, Namo Buddhaya, Salam Kebajikan. Ladies and gentlemen, I think in the morning we already hear a very interesting discussion from our governor, Pak Peri, and also from Ms. Gita from the IMF. And they ensure that the situation in 2022 is not a very easy situation. Based on the discussion, I think in the last 1 week in the US, in DC, with the IMF and also some global leaders. And the top of the top, I think, as Ms. Gita mentioned, or on top of the crisis that we have so far, actually is coming from the Russian and Ukraine conflict, which is right now is become prolonged, and we even don't know what is the bottom of that crisis. And what happened in the Russian and Ukraine conflict, I think this is uh, once we already have to solve a big problem in the pandemic COVID. Right now, we have a very severe crisis in Russian Ukraine that resulted in high global commodity prices and then also worsening disruption in world trade chains and increased uncertainty in global financial market. And also one of the challenges that we are facing right now actually is coming from the is quite aggressive normalization policy taken by the Fed and also some other central bank in advanced economy. And those actually as a response of the inflationary pressure coming from domestic and demand and also coming from the hike in the commodity price and food prices because of the Russian-Ukraine conflict. And Ms. Gita already mentioned this morning that IMF finally has reduced their prospect of economic growth globally from 4.2 from earlier 4.4% to become 3.6%, while the global commodity prices including energy and food prices, are predicted to be higher, and this also could trigger inflationary pressure globally. And moreover, increased uncertainty on global financial market will result in more limited capital flows to emerging market countries, along with the increase in the risk of capital reversal to safe haven assets that potentially give more pressure to the exchange rate of developing countries, including Indonesia. However, we are very fortunate, as mentioned by Pak Perry earlier, that if we look at the direct impact of Russian-Ukraine conflict to Indonesia, actually is limited. Even in some extent, Indonesia get some benefit from this conflict because of the high commodity price, and Indonesia actually still considered as a commodity-based country. So that's why what happened, domestic demand also growing very fast in Indonesia. And we can see that recovery across the board on the expenditure side and also on the production side, and even at the regional level is happening. Yeah. Especially we can see starting from 2021 in the mid 2021 and until early 2022 we still see some recovery in our economy thanks to our strong domestic economy and also supporting by our good export, yeah, export performance because of the high commodity price. And also, if we look at some number of early economic indicators in March 2022, such as retail sales, consumer expectation, and manufacturing PMI, confirm the ongoing domestic economic recovery. Therefore, in Bank Indonesia, we expect that the economy in 2022 to grow at around 4.5 to 5.3%, higher than that in 2021 at 3.6%, and even minus 2.7% in 2019. However, if Russian-Ukraine conflict is prolonged, I think we have also to be very considered, especially also with the normalization in the U.S. That of course gives some complex challenge for our economy, especially for us as a regulators and as a macroeconomic policy makers. Yeah. Because of course Bank Indonesia as a monetary authority we aim to stability Indonesian economic from the impact of external pressures. But on the other hand, economic recovery, Bank Indonesia also has to ensure the economic recovery post COVID-19 pandemic. So that's why we have to balance between maintaining the stability, yeah, because at the end the impact of high commodity prices, food prices coming from Russian-Ukraine conflict, this will come into materialize on the inflation domestically. But on the other hand, we have to support the economic growth because the momentum right now is still there. Yeah. And also from the fiscal side, if we look at the fiscal side, the Ministry of Finance, Ibu Sri Mulyani keep telling us that the fiscal function is as a shock absorber. But on the other hand, there have to be some consolidation on the fiscal side because by later on, next year, the deficit of fiscal must be come back to the 3% level. So that's why this is kind of dilemmatic that facing by us as the regulators, even in Bank Indonesia, also in Ministry of Finance. So how we have to resolve this? The first, actually, we have to strengthen our coordination between Ministry of Finance with BI and also doing some structural reform. This is a must be done by us. And also we are implementing well-calibrated, well-planned, and well-communicated measures. Distinguished ladies and gentlemen, of course, as I mentioned earlier, that close coordination and policy mix between fiscal policy, monetary policy, and also real sector policy, I think we have to hand in hand and go together. And in BI itself, in BI we will optimize the use of policy mix to face these challenges. As Pak Peri also mentioned this morning, what we are focusing, the first actually we want to maintain the stability of the exchange rate, the stability of the rupiah. And so far we can maintain stability in the rupiah with the depreciation relatively manageable compared to other country in the peers. Yeah? And even we are looking at the rupiah is slightly strengthening in the last 1 week, despite some pressures from the global pressures. Yeah? So this is our first priority, maintaining stability. But of course, we want the market mechanism on the exchange rate is working. And the second, as Pak Peri mentioned, actually is coming in the form of liquidity management. Liquidity management, liquidity normalization, because as a pandemic COVID situation in 2019 and 2022 and 2021, Bank Indonesia and also the governments has a very loose policy, monetary policy and fiscal policy. And what happened right now with the normalization, we are starting to normalize also the liquidity. And then interest rate, I think the interest rate is the last policy that we will take. If the situation, for example, if inflation is continue high, then of course the government, the Bank Indonesia will step in and then using the interest rate as the final policy. So what we are going to do right now actually, we have series of policies. We will mix this policy. So we call it as a BI policy mix. We have monetary policy. And monetary policy is focusing toward stability. So the monetary policy is focusing on the stability in the economy, while macroprudential policy is focusing on to support the economic recovery. And what we do right now under the monetary policy, we are still keep our interest rate at the current level at 3.5% for BI 7 days plus repo, but we are trying to manage the liquidity by increasing reserve requirement ratio by 300 basis points starting in March and then June and then September. And if necessary, if we are looking at the liquidity still ample and also inflation start to picking up, we may use further increase on the reserve requirement ratio itself. But we want to use to optimize the use of reserve requirement ratio to manage the stability and also to manage the liquidity in the system. However, we will ensure that the rising of the reserve requirement ratio will not give pressure or great pressure for the, especially for the banking sector, because as we all know that right now banking sector still have a very ample liquidity. So that's why we will ensure that the increase in the reserve requirement ratio will still give more room for bank to lending and also to participate in the buying in the government bonds. On the other hand, as I mentioned earlier, macroprudential policy is giving to support the economy. And what we give actually is for the reserve requirement ratio itself, we are giving an incentive as much as 100 basis point to enhance for the banks who give credit for the priority sector and also for economic inclusion. And it may increase further if necessary, especially to support some priority sector growth. So that's why we are combining for the reserve requirement ratio, liquidity management, we are trying to normalize the liquidity, but in the same time, by using reserve requirement ratio, we also will give incentive for banks to increase their credit and also to support some sector, some priority sector growth. And also maybe I want to highlight some accommodative macroprudential ratio that we are giving right now actually is related with the policy of RPIM. This one is macroprudential inclusive financing ratio that aim to support inclusive financial economy, especially for MSMEs. And also for the macroprudential policy, will also be equipped with policy innovation to support sustainable finance in achieving zero carbon economic target. And other than macroprudential policy, we also have for the payment policy. So payment policy is also the policy is directed to support the economic activity and also including to achieve the inclusion growth for the people. So that's why we are issuing QR Indonesian standard, and even we continue to expand the use of KRIS, and we are expanding our fast payment PI Fast and intensifying the electronification program through social aid program digitalization and electrification of local government services and integration of different transportation mode. And especially for KRIS, because we look at so far, I think it's almost 2 years, the operational of KRIS, QR Indonesian Standard. We look at a very impressive achievement and also the performance itself. That's why we decided to increase the limit of transaction KRIS from the beginning 5 million to become 10 million per transaction in March, and further increase to 20 million effective in June 2022. Because we look at the response of the public is very interesting and very positive on KRIS. So that's why we are trying to expand not only on the nominal side but also in terms of the expansion in the cross-border KRIS with other countries, especially with Malaysia. And I think that's Kanya. And last thing, maybe we just have, I think early this week, we have a board meeting and we decided again to keep BI 7 days reverse repo at 3.5% and deposit and lending facilities at fixed at 2.75% and 4.25%. Bank Indonesia has also continued to optimizing its policy mix strategy to maintain stability and support the economic recovery by using some policy measures like strengthening exchange rate policy, maintaining an accommodative macroprudential policy, and then maintaining prime lending rate transparency, and then also ensuring adequate availability of currency.
Hindi pa tenis nih? Sama denger matiin. Coba tanya cerah. Oke.
We are doing so far, and last but not least, the more important actually is how we are strengthening our policy coordination with the government and also with our other institution, because what we are facing right now, the complex of the issues is very high, so we cannot manage and handle this by ourselves. So we have to be together. We have to recover together and
Sama HP. Taruh HP-nya lah. Taruh HP-nya. Sama sama. Ini loh, nih, tunjuk nih. 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 Tuh, coba. Tuh, nih. Tuh. Coba. Coba.
Ya. Bersih.
Bersih. Apa sih? Iya lo anaknya gantian, karena yang jaga siang. Hah? Ih,
Gara-gara HP lu, dari tadi mau ngomong berisik banget.
ya apa lo? Ini udah berisik kok, juga nggak nelfon.
Nggak ada masuk banget.
Ya enggak keras kok. Ini anak gantian. Ayo jalan jam 2 kok. Nah, 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 nah. Iki. Apa yang maksud? Sopan. Sopan. Beras.
Ada